Welcome back to Fast Market, everyone. Kevin Hinks and Shawn Cruz back for our, we'll call it our third segment. And now I'd like to bring in the co-founder of LikeFolio.com, Mr. Andy Swan, to the show. Andy, welcome to the Gig Economy Show today. You're talking about really the feature. They have earnings tomorrow, Uber Technologies. Andy, this sector of the U.S. economy is a mess. It's a mess for many reasons. Tell us the LikeFolio data on Uber and the gig economy in general.
Yeah, I think a mess is a good way to put it. This is almost the tale of two companies inside of Uber at the moment. We've seen this throughout the pandemic, and now as things unfold, Uber really has two very separate divisions, which gives it a portfolio of both ride-hailing and food delivery. But it seems like neither one is ever clicking at kind of the same time. Right now, at LikeFolio data, we're really seeing very strong indications from the ride-hailing market in general. People are traveling for work more. They're relying on ride-hailing services like Uber and Lyft at much higher levels than they are taking a cab. But the problem for Uber, and Uber is outperforming Lyft, we will say, very significantly at this point. So I think Uber's done a very, very good job of capturing that ride-hailing return. On the downside, it's kind of flipped everything that happened during the pandemic. During the pandemic, everybody was ordering food from restaurants in. We really got that whole food delivery thing on the next level. Now that's really started to pull back. We got really tough comps on that. And you can see that Uber Eats and Postmates, which they also own, really down from a consumer demand perspective year over year. We're talking 24%, 42%. And this is where Uber's really actually losing to the competition. Unlike in ride hailing, where it looks like they're pulling away from Lyft in a considerable fashion, they're really losing to DoorDash, because when you compare these Uber Eats and Postmates numbers at -24 and -42% consumer demand year over year, for DoorDash, it's almost flat. And that tells me DoorDash is really winning the market share game when it comes to food delivery. So, it's a mixed picture for Uber, I think, going into this earnings call. I think that they'll be able to talk very positively about their ride-hailing service and the growth there and their performance versus Lyft. But on the food delivery side, they're getting it handed to them by DoorDash in a contracting overall market at the moment. And so I think it's going to be a mixed message from Uber. I think this is one of the best local logistics companies in the world. We're really impressed with the company and think long-term it's probably the big winner out of all of this space. But right now, I think they've got a really, really tough mixed message to deliver to investors on this earnings call moving forward.
Andy, you can just give yes or no on this one. You ever gotten on one of those Lyft scooters? You're a big guy.
No, I can't.
Yes,
I see myself doing
No. Think of the body armor that you'd have to wear, like me, to get on one of these things. It's just projectile going forward.
I want like a charity race. Hinks versus Andy Swan on the Lyft scooters.
That's a race that may never end.
Do it for the kids.
I don't think mine would move. I think I'd get on and get an alert on my phone, like, weight limit exceeded, please leave the area.
One of you get off. I got a message. One of you get off.
Even better, both of you on the scooter at the same time would be great.
Oh, now you're just getting weird.
So if we're looking at this, though, and you look at purchase intent, one thing that Kevin alluded to, and I think it's a more interesting part of the other side of the equation for them, is supply. Are you seeing anything out there just in terms of people who are going to be the providers of the delivery, whether it's a person or a meal, saying, you know what, Lyft is, not giving me enough of the cut, or Uber isn't? Are you seeing, or do you have any insight into how that might be developing for either of these companies? Because that might actually have a big impact on profitability as well, right?
Yeah, I think it does. I think one of the biggest trends that we see is actually the preference that these drivers have to not have people in their car. They would much rather be taking you a burger and fries than be taking you home from a bar. That is the overwhelming opinion. So from a supply side, I think the meal delivery side of things is good to go. I don't think they'll have any problem getting people to deliver items or goods locally. That local logistics play, again, I think is very good. I think that's why Lyft is having significant trouble and will continue to. So from a supply side, I think it's really more about the driver preference than it is anything else. I think that so far we've seen a good number of drivers. We haven't seen too many complaints on inability to find a car or a ride or a driver for your food. So I think it's more about that driver preference at this point.
Andy, we have to talk about this Proposition 42 about the difference between employees and independent contractors. As you know, I speak fluent hyperbole. I believe if these companies lose this fight, it's a death sentence for them. There's no way they can pay these employees or attract them by making them real employees. Because think about it. If you're an independent contractor, you get to drive where you want and you get to work when you want. If you're an employee, they're going to put you at certain hours, 9 to 5 or in their whatever their peak hours are, and they're going to tell you where to work, right? That's what they're going to do. This doesn't work with independent contractors turning into employees. Tell me where I'm wrong.
No, I think overall you're right. The only way I would say that you're probably wrong is that, there's an American ingenuity that finds its way around these types of stupid laws. I think you would get these companies moving to jurisdictions where that's not the case. I think they would be able to thrive there. I think they would figure out new ways to employ people for 15-minute segments at a time. I think there's a lot of ways potentially around this that haven't been necessary to this point. So, I think it's a really bad idea. It's a really bad law. I mean, I understand the argument, and I wholly reject the argument that these are full-time employees. In fact, I think most of the drivers would much prefer to be able to say I'm working or I'm not working on their own time whenever they see fit. So, I don't think it's a death sentence, but I do think it's really bad idea legislatively, and I hope it fails.
All right, Andy Swan, co-founder of LikeFolio.com. Thank you so much for coming on as always and sharing not only data, but a couple visuals that may have been disturbing to our viewers with you and I. Thanks for coming on, Andy. Have a great day.
All right, you too.
All right, Shawn.